All right, it's been a long time since I've made a video. So we got a trade set up that I called out. Uh, USDJPY demand. Shouts out to Chris for the odd cash setup. I took a little scalp on that. I like that trade. So we do have a USDJPY demand setup, right? We got a clear breaker structure with a fair value gap. Some people are taking the fair value gap right here. You know what I'm saying? The break of the candle on the fair value gap stops or below to continue going up. Me personally, I don't take the fair value gap. Why? Because I learned with these fair value gaps, the market likes to fill in gaps. So when the market fills in gaps and there's a demand below, that's the one I want to take. I want to see this market come down here, fill in the gap, reject the zone, then start going back up. That's what all of our trades have been, and that's how they always will be. It's very elementary. So, matter of fact, let me give you an example of that. Let's see. Let's go something I don't trade. I mean, I trade most of everything. So, for an example, this is actually EJ. This EJ right here's a supply right here on EJ. 200 EMA with it and everything. Right here is the gap. You have a gap from here to here that is rejecting off the gap. So what I would like to see with EJ is it to push up because up here, then drop back down since it'll fill the gap in. Now the reason why I'm taking UJ as a demand setup is it's trading above the 200 EMA and then EU, which is the difference between EJ and UJ. EU's bearish right now. So if EU's bearish right now, EJ, we can sneak in a sell setup. And remember, all of our trades are 2RR. So once it breaks the candle, I'm only looking for a 2RR. Like I'm keeping the risk in our favor. When I used to do 1.5s and 1-to-1s, but we do 2RR to for longevity purposes to make sure that we're getting profit out of this. Let's see another one. I want to see. I want to show a real nice one. So, like right here, this was a fair value gap, right? See how it was bouncing off this fair value gap, but eventually it filled in the fair value gap to come down to this demand. You see what I'm saying? And it tapped the demand, and when it tapped it, you took a little break a candle. This is weird. This is a weird break a candle. Stops real tight, and look, this is a 1-to-1 because I don't trade New Zealand cash. But you could have got a 1-to-1 out of that move after taking out the fair value gap and coming down to the demand. You got a quick 1-to-1. Then after that, it's out. You know what I'm saying? It don't have to stick. We just trying to take it to the next little supply area, which is right there, or either if we were trying to target back up the highs to right there. But New Zealand CAD didn't do that. I'm just giving you an example to what it did. It actually just went up to this little supply right here, if you can see it. Right there. So a little small supply right there. So the gaps have to be filled. Oh, what is this line right here? Gaps have to be filled, then come down to our demand or our supply, whatever, whatever way we're taking it. And then boom, we take the move. If you want, you gotta burn that into your mind. You know what I'm saying? Even right here, here's another one. I can see them. There was a gap right there. But however, there was a demand right there, right? It lightly tapped it and then went up and it took out the high. So we would have took this trade, we would have took the break of candle stops below the last wick, and we could have had a 1-to-3 off that. Or if we go into that high, that's a 1-to-2. That's a perfect setup for me. Candles, I don't like choppy candles because New Zealand cat got some choppy candles. But when we're scalping, that's what we're looking for. Now, however, we do the same thing on the higher time frame, right? So if we remove this and go to a higher time frame, it's the same setup on the higher time frame. Matter of fact, look at New Zealand CAD. It's actually at a supply. It tapped into a supply. So this should drop from here. So for an example, it already broke the candle right there. So we were taking this as a swing. Why is the thing all the way? What in the tired nation is this? Why is it doing that? All right. It's got a mind of its own, people. So we were taking the breaker candle, which this is I'm actually gonna call this trade out low key. And I'm gonna take this. This is a really good setup. Because it already broke the candle. So the stops will be above the zone, and we will be taking the 1 to 2. That'll be a beautiful 1 or 2, or we'll be just trying to take where liquidity is at. So liquidity is below that low. So we could just take it out right there if the direction is bearish, which it is. You see what I'm saying? That will be how we will take it on the higher time frame. Now, this is the daily. This is a swing. We're actually about to call this mug out, and I'm about to get in right now on my account. Long term, New Zealand CAD sell supply. We getting in. I'm getting in on that right now as we speak. I'm on my phone doing it now. So let's see. All right, so look at this. I want to show you something. See, the fair value gap worked. It actually worked and went up. But it's still valid to take this trade. So I got a notification on when it crosses there. So what I'm gonna do is this. We're gonna go in here, go like this, and I'm gonna tell them on the signals thing. Put a notification on for that demand. So they'll be looking at. So once my phone tells me it's back there, then I'm gonna be looking for the break of candle entry. I stress this. Used to stress this out for years now. We've been trading the same way. I'm gonna give you another example. Repetition is key. Repetition is always key. I see a few of them. Here go a beautiful one right there. Okay, we want to see it even more. Why is New Zealand USD just be chop A? All right, let's see. That one's nice. Okay, but I want to see. I want a textbook one. It don't really have to be on the 5. Okay, let's see. That one's all right. Okay, I like this one because it ain't supposed to look pretty all the time. Y'all be looking for pretty. So right here is a demand. After this impulsive move up, then we have a demand. Tap, tap, tap. The breaker candle entry would be once a live candle break above here. We will be getting in right there, stops below the zone, and we'll be targeting. You can either target the high of the move, but I'll be wanting a 1 or 2. You know what I'm saying? I'll be happy with a 1 or 2. You know what I'm saying? So look, we got our 1 to 2. Usually you got your 1 2, and look what happened. It just tanked after that, after getting off that move, and I'm okay with that. And the reason why it tanked because there was a supply right here anyway, so it tapped into that supply. So 1 to 2 would have been perfect, but that is the break of entry that I've mastered over the years, and now I'm at a point where I'm making a little money. It ain't the best. I make my little weekly. I make my little 3 figures, 3 to 4 figures weekly, and that's a start. That's better. I'm consistently. So let me just be honest. I consistently can make me a little $500 or $600 a week. I can consistently do that. And then, obviously I do still have break even weeks. And there's still some weeks where I'm in drawdown. That just comes with the game. But longevity, my goal monthly is in the 4-figure range. Where and when I say 4-figure range, I'm talking about somewhere around 1,000 to 2,000 a week. I take this slow. Trading is supposed to be a slow process. But I'm gonna start kicking it up a notch because I want to get to a point where I'm getting away from um off my truck. So that was just a perfect example. We're gonna get a little bit more. We're gonna open up and make it more lively on the chart. I mean, on the chat. I just been giving out trade setups. I've been kind of busy. We're gonna open it back up and get people more involved and get more people into the chats. Me and Chris got some plans and stuff like that for the future. Hopefully, you guys are doing good, and I will see you on the next video. Peace.